Good morning. It's Thursday, September 4th. I'm Phil Streible, Chief Market Strategist at Blue Line Futures. So let's check in on your setup here in the U.S. equity markets and also the precious metals. So there was significant movement in both gold and silver overnight. And as the price rises, you could expect to see volatility rise and a larger average true range. If you don't have average true range, put that up on your daily chart. It'll help you for risk management purposes and also to gauge as far as position sizing because the volatility is increasing. Now, when silver prices peaked in 2011, basically what happened was they pushed up onto a Friday close, they gapped higher on a Sunday night, they capitulated on the Sunday night price action, and by the time the cash open had occurred on Monday morning, futures were down about $4. And the important point is that if you're trading something like an ETF, like SLV or GLD, you may find yourself at a disadvantage regarding liquidity and capital efficiency. So if you're interested in opening up a futures trading account, please send an email to info@bluelinefutures.com. Now, stocks, they are inching higher here and adding to yesterday's rebound as relative calm returns to the market here as traders go more confident that the Fed will cut interest rates this month. We saw a smooth 30-year action here, price auction in Japan that's helping out some of the mood here, and there's a strong appetite for corporate debt, providing a vote of confidence here. Now, the S&P 500 up about 0.2% in this pre-market trading here, and also the NASDAQ up about 0.3%. Some of the sectors in focus, you do have the Mag 7. It's a bit mixed here in the pre-market trading, and then you look at European trading. Well, they gained, and also Asian stocks, they snapped a two-day losing streak, really led by those financials as investors return to risk assets. Now, the key events here later today include ADP, that employment change here, and the challenger job cuts here for August. So this comes before the big one here tomorrow. That's tomorrow's non-farm payroll. So the data is highlighting some softness in the labor market, and the swaps are starting to show traders are nearly fully pricing in this quarter basis point cut here on that September 16-17 meeting, and they're broadly split here when you go to the October meeting. So what you want to do is you want to bookmark that CME's Fed Watch tool here. Just Google that, bookmark it, and it is at one of the highest levels here as far as when you scroll down, you'll see a 97.4% chance of a 25 basis point interest rate cut. You'll see a 2.6% chance that the Fed leaves rates unchanged. So it really seems to be baked in the cake. You're going to have two Fed speakers here today. You'll have Fed Williams and then also Goolsbee. Now, looking at gold and silver here, and you look at gold, down about $36.40, trading right on either side at 3,600. High of the overnight session, 36.2160. Low, 35.7370. So it's down about 1%. Now, Goldman Sachs, I printed this off the Bloomberg terminal this morning. They're coming out and they're calling for, they're saying that gold could rally to nearly $5,000, and that's possible if the Fed standing is damaged. So basically what they're looking at is Fed independence. They're saying that, if Trump is able to replace Cook, you get Powell out, you get this majority as far as doves here following that are politicized, following Trump's lead here and the push for cutting interest rates more, you could see a really acceleration in the gold market. Something else that I had looked at here was a report put out by Morgan Stanley, and they were saying that they discussed that gold and silver have risen on average about 6% on gold, 4% on silver, respectively, in the 2 months after the Fed starts its interest rate cutting cycle. This is why perhaps using some of these, and this is more tactical trading here, and this is just some thoughts that I have for myself, is that as the market comes up, as we bang on some of these resistance points, and we breached the $42 mark on silver yesterday, and we got up to about 42.23, not quite up to the 42.43, which was really that volatility adjusted resistance point, and the futures had settled back here just a bit. But looking at some of these things like perhaps tomorrow's employment data, perhaps looking at the CPI data and those dips there in order to start to redeploy capital back into some of these precious metals markets here. It warrants more of a bullish tilt if you get some of these sell-offs occurring, provided that we don't break any kind of key levels of support and alter the trajectory of the trend. Now you look at silver, that metal's up about 40% this year, and it's really starting to outpace the gold market. You see the gold-silver ratio sitting at about 86-1. It makes it one of the best performing commodity assets in 2025, and it's trading both in inflation play and also an industrial growth play. Now, when it comes to the industrial growth, you want to start to look at things like platinum, you look at palladium, you look at copper. Copper down 1.5%. Platinum down 3%, palladium down about 2.5%. So that's going to be a tough environment for silver to break loose here today and rally. You've got the dollar index pushing up. You've got 10-year treasury yields just ever so slightly softer, but you've got a lot of event risk coming up here. And you have the U.S. equity market starting to push upwards. You've got some liquidation going on in the cryptocurrencies as well. And you've got all the foreign currencies. They are a bit lower, as well as the agricultural market. So just a risk-off environment across the board, which makes it very difficult for one specific asset class to break loose and look up. So if I'm going to be watching these markets, I would look for more of an acceleration higher in the U.S. equity markets, perhaps a rebound in the cryptocurrencies, the dollar index to turn negative, and then I would start to look at what the price action is in gold. And then if gold can start to work its way back up, then perhaps you see silver start to push its way up. So it's really just a roadmap and a checklist that I specifically go through on a daily basis. And you can watch these kind of events unfold, and it's almost like a slow motion movement here in these markets, and then that's when you could start to really tactically trade in a lot of these different markets. So you do have copper falling for a second straight day, and you go over to the oil market. Oil had started to break out to the upside, looking to go bullish trend, and then what happened was that the futures, they slid down, and we had that breakdown yesterday, and then we've got a follow through extension today, down about $1 here, trading below the 63 mark here, in oil declining on concerns that OPEC Plus will bolster supply at the meeting on Sunday, and really compounding the fears of higher volumes of oil output later this year. We've got oil stockpile data that's also weighing in prices, with the estimates showing that inventories in Cushing, Oklahoma are expected to expand by about 2.1 million barrels last week. And you got Goldman Sachs reaffirming a bearish outlook on oil, citing those expectations for output to top the consumption and forecast for Brent down in the 50s here into 2026. So you go to the silver ETF flows and the gold ETF flows. Well, they did trim some of the ETFs here yesterday. They cut about 137,000 ounces in the gold market here, while also on the silver market, they boosted that up about 1.43. So you got a lot of people chasing, a lot of FOMO buying going on in the silver market. And I tell you, as you see that volatility expand and the average true range expand, it doesn't make sense here to chase these markets higher, because just from my experience is that when you don't think something's going to happen, when there's complacency, when you got that FOMO, when you've got that emotional state, that's when really the market's set up to really punch you in the face, be just straight with you here. So that's why looking at maybe your minimum position sizing when you have any kind of FOMO type of event is more of a prudent way of playing some of these markets. That way you have some skin in the game, but not enough to have these types of sell-offs like what we're seeing in the overnight, where it really impacts you, and it impacts you not only emotionally, also from a capital standpoint. So if you guys got any questions, Bill Baruch, my partner, will be back on CNBC for the halftime show talking about some of the plays that we're doing on the wealth management side. Got a lot of great things going on in wealth management here. So if you're looking at a financial advisor, if you don't have one, if you got old 401ks or old IRAs sitting around here, that's where an active manager such as Blue Line Capital, myself, Bill Baruch, and our other partners here will really come in and take the reins on that type of situation. So you guys got any questions, shoot an email, info@bluelinefutures.com. And remember that futures and option trading, well, it does involve risk of loss, and it may not be suitable to all investors. Good luck and good trading.